Are you a bit worried about where our country and debt pile are headed? Or perhaps you're just looking for a bit of portfolio diversification. Let's talk about the #1 brokerage for international investing. Hello, Diamond NestEgg members, super savers, and course fans. I hope you're healthy and well. So, many in our community have brokerage and retirement accounts with Fidelity, Schwab, and Vanguard. And these three remain the most popular online retail brokerage giants in the business because of their size, reliability, and ease of use. But say that you're interested in investing outside the US. Perhaps you want to buy individual international bonds or foreign currencies. This is something that quite a few of our Diamond NestEgg regulars appear to be increasingly curious about. Some because of the ongoing noise about the US economy and treasury market, and others simply for the purposes of potentially higher yields and diversification as their portfolio has hit a certain size. Because as we discussed on last week's Member Live, international bond yields have also been going up this year, just like yields on US treasuries. So, if this is you, if you're interested in foreign fixed income and other investment products, you may find that your broker is somewhat limited in this respect. And that's where Interactive Brokers comes in. Interactive Brokers may not be as big a household name as Fidelity, Schwab, and Vanguard, but it holds a prominent position in the industry amongst individuals who want to access additional opportunities that may not be as widely available elsewhere, including international bonds and stocks, foreign currencies, and advanced trading tools. And for those of you who are interested in foreign bonds and potentially higher yielding and more advanced opportunities for income investing, our end of summer sale is on. Use coupon code INCOME2026 at checkout before Monday, August 31st to take $100 off of our VIP investment club. And see what other like-minded investors are buying now for higher returns and how they're protecting their nest egg. Visit our website at www.diamondnestegg.com and click on this yellow private VIP investment club button to learn more and join us today. The $100 coupon code INCOME2026 can also be used for a bond course bundle and individual bond courses. I've linked everything below this video for you as well. So, back to Interactive Brokers. According to their website, they're ranked as the best online broker by Broker Chooser and the #1 in international trading by both stockbrokers.com and Investopedia. This makes Interactive Brokers a versatile option if you want to expand beyond the more traditional and or domestic investment products offered by other brokers. However, for all their advantages, Interactive Brokers can be a bit more complex to set up and navigate. So, with that in mind, here are the 3 topics I'll be covering today. 1. Who is Interactive Brokers? And what are they known for? 2. What does the international bond offering at Interactive Brokers look like? And 3. How is your money protected with Interactive Brokers? Let's dive in now, folks. Who is Interactive Brokers? And what are they known for? Interactive Brokers was founded in 1977 by Hungarian immigrant Thomas Petterfy, who at the time of this taping on August 26th, 2026, is number 17 on the Bloomberg Billionaires Index and worth about $116 billion, even one spot ahead of Microsoft founder Bill Gates, who is number 18 on the list. Interactive Brokers is headquartered in Greenwich, Connecticut, and has over 3,260 employees in its offices in the US, Canada, the United Kingdom, Ireland, Switzerland, Hungary, India, China, Japan, Singapore, and Australia. IBKR is regulated by the SEC, FINRA, New York Stock Exchange, FCA, and other regulatory agencies around the world. The company is rated A- by Standard & Poor's with a stable outlook. Interactive Brokers is listed under the ticker IBKR on the NASDAQ and joined the S&P 500 in 2025. At the time of this taping, they have over 5 million clients worldwide and $903 billion in client assets. Interactive Brokers started out with equity options trading on the New York Stock Exchange and has since expanded into an online brokerage and trading platform that covers a wide range of investment products and markets, as I mentioned earlier. That said, unlike Fidelity and Vanguard, which can often feel like they're more geared towards long-term investors, Interactive Brokers is better known for its advanced and global reach amongst traders. Their online platform offers access to 170 markets, 40 countries, and 29 currencies, with access to market data 24 hours a day and 6 days a week. They also say that they offer a vast universe of more than 1 million bonds and that you can trade U.S. Treasuries around the clock 5 days per week, bringing us nicely to the next part of today's discussion. What does the international bond offering at Interactive Brokers look like? So, at the time of this taping on August 26, 2026, we can see from the bond scanner screen, Interactive Brokers offers approximately 24,000 global corporate bonds, 7,900 U.S. CDs, 1,200 treasuries, 1 million municipal bonds, and 2,200 non-U.S. sovereign bonds, meaning the foreign bonds that quite a number of you have been asking about. So let's assume that you watched Marcus's latest video on what's safe if the US defaults, which I've linked below for your convenience, and you decide that you're interested in bonds from Australia because it's on this list of 10 countries worldwide that hold AAA ratings from both S&P and Moody's, shown alphabetically. A quick search via Interactive Brokers bond scanner returns 37 Australian bonds, with the highest ask yield at 5.527%. It's a bond issued by the Australian government that matures in 2051, and it's non-callable, as indicated by this X here. Keep in mind that this ask yield is based on the minimum purchase requirement, shown here, of $100,000 face value at the time of this taping. Your ask yield will differ depending on how much you're buying, the market conditions at the time you're transacting, and many other factors. And if you like Australia, but have an even stronger preference for the Swiss franc as a potential safe haven, what's safer than the Swiss currency after all? Then you might be interested in this bond here. It's denominated in Swiss francs and issued by the International Bank for Reconstruction and Development, which is essentially the original core institution at what we now know as the World Bank. It's owned by 189 member governments and has been rated a clean AAA by the major ratings agencies for basically as long as ratings have been around. It really doesn't get much safer than this bond in our mind. But this is also reflected in its ask yield of only 0.996%, which is a bit paltry, even if you assume that the Swiss franc will continue to appreciate over the next 14 years. And if you have a higher risk tolerance and want to move beyond these 10 countries worldwide that hold AAA ratings from both S&P and Moody's, a more general search on Interactive Brokers bond scanner shows that the highest yielding non-US sovereign bond has an ask yield of 14.753%. It's a bond issue from the government of Senegal, maturing in 2031. This is followed by some bonds from Ukraine, maturing in 2029 and 2035, with ask yields of 12% plus. All of these bonds are also non-callable. Always remember rule number 1 and rule number 2 from me and Marcus when it comes to your hard-earned cash. Rule number 1 is never buy what you don't understand and or keeps you up at night. And rule number 2 is higher risk, higher return. There's no free lunch in finance, which is a nice segue into what Interactive Brokers charges. They say that they offer low commissions with no added spreads, ticket charges, platform fees, or account minimums. What this means in real life will depend on the type of bond that you're buying on their platform, as well as how much you're buying. For example, for corporates and CDs, for the first $10,000 US in face value, Interactive Brokers will charge 0.1% or 10 basis points of the face value. So, if you were to buy $5,000 face value of, say, Apple corporate bonds, you would pay a $5 commission. That's 0.1% or 10 basis points of the $5,000 face value. The minimum commission in this instance would be $1, and the maximum commission would be the smaller of $250 or 1% of the trade value. Do note, though, that there is a cost for buying and selling treasuries, as you can see here. This is different at other more retail-oriented platforms like Fidelity, Schwab, and Vanguard, where all online transactions in treasuries are generally free. At 0.002% or 0.2 basis points of face value, Interactive Broker's treasury fee is not massive though, and depending on what you trade and how much tighter spreads might be at Interactive Brokers, it may even work out to be cheaper overall than from a less trader-oriented platform. I've linked this fixed income commissions page below in case you want more details. And don't forget to take advantage of our end of summer sale if you're interested in learning more about foreign bonds, what the risks are, and how you might be able to simplify your financial journey while still achieving potentially higher returns and or portfolio diversification. Our VIP member video this month will cover international bond funds and ETFs. Use coupon code INCOME2026 at checkout before Monday, August 31st to take $100 off of our VIP investment club. Visit our website at www.diamondnestegg.com and click on this yellow Private VIP Investment Club button to learn more and join us today. The $100 coupon code INCOME2026 can also be used for a bond course bundle and individual bond courses. I've linked everything below this video for you as well. So, now that you know who Interactive Brokers is and have an overview of their foreign bond offering, let's move on to the next part of the discussion to see how safe your savings and investments might be if you were to open an account with them. How is your money protected with Interactive Brokers? Like all major brokerage companies, Interactive Brokers is SIPC protected, as it states on their website. Client securities accounts at Interactive Brokers LLC are protected by the SIPC for maximum coverage of $500,000 with a cash sublimit of $250,000. In addition, Interactive Brokers LLC carries an excess SIPC policy with certain underwriters at Lloyd's of London, which extends the per-account coverage by an additional $30 million, with a cash sublimit of $900,000, subject to an aggregate limit of $150 million. Futures and options on futures are not covered. As with all securities firms, this coverage provides protection against failure of a broker-dealer, not against loss of market value of securities. In addition, for eligible customers, Interactive Brokers offers an insured bank deposit sweep program that provides up to $5 million of FDIC insurance for an individual account and $10 million for a joint account, in addition to the existing $250,000 SIPC coverage, for total coverage of $5.25 million for individual accounts and $10.25 million for joint accounts. I've linked the SIPC and FDIC details below for you as well. So drop a comment below for me, Marcus, and the rest of our community. Do you have an account with Interactive Brokers? And if yes, what do you think of their fixed income capabilities? And what do you like or not like about them generally? And for those of you who don't have an account with Interactive Brokers, what are your thoughts after watching this video? Is investing in individual international bonds for you or not? And do you want a follow-up video on how to open an Interactive Brokers account and use their bond scanner? Curious minds want to know. All right, Diamond NestEgg members, super savers, and course fans, I hope you enjoyed today's video and learned something new. And see you again very soon with more brand new wealth building content for your financial journey.